All right, so welcome to the group. Manufactured housing is not the trailer that we think about from decades past. This session will separate the myths from reality, especially around financing. And it's funny how many of these we actually ended up doing this year. I haven't done them, and I was always asked, and I always referred them out. But we've done quite a few this year, and they're incredibly popular and a great way to get into a home, especially here in California, where it's a little bit difficult to finance property. So this is about me. Been in the industry for 24 years, been top 1% nationally for the last 10 or 11 years now, licensed in 20 plus states. And really, I mean, we focus on first time home buyers. That is our heart and hope to bless people looking to purchase their first property. So, what we're going to learn today is the basics: mobile home, manufactured home, modular, the HUD code, financing, details, and getting it done. So, why manufactured housing is booming? The homes have changed, so is the math. California's affordability gap is widened, right? Site built inventory remains limited in most markets here in the state, and construction costs for site built homes keep climbing. So manufactured homes build faster than site built construction. Energy efficiency has improved dramatically, and today's homes look and feel like nothing like the stereotype. The homes got better, the financing is more sophisticated, and most buyers just haven't caught up yet. So mobile versus manufactured versus modular. Mobile home built before June 15, 1976 predates the HUD code. So manufactured home built after June 15, 1976 and built to the federal HUD code. So much wider range of financing. A modular home is factory built in sections, built to local and state building codes, not the HUD code. Generally financed like a site built or stick built home. So HUD code explained the federal construction standard, not a suggestion. What it covers is structural design and strength, fire safety, energy efficiency, wind zone construction requirements, and quality control during manufacturing. Every home built to HUD code carries a certification label. Lenders and appraisers look for it. We have to have it. Where can manufactured homes be located? Private land the buyer owns, manufactured home communities and parks, rural property, approved subdivision, agricultural property, local zoning, and where the home sits, almost everything about how it's financed. Now, land versus land leased. The single factor reshapes the entire financing conversation. On the land, real property financing is available. Land contributes to appreciation. Property taxes applied to land and home, and broader range of loan programs. Lease to land often finances personal property like a chateau. Land itself does not appreciate for the owner. The space rent is separate, ongoing costs, and financing options are more limited. So owning the land underneath the home is usually the difference between real estate financing and personal property financing. So what's the chateau? It's financing a home as personal property, not real estate. So it's in a land lease community. Home is not permanently fixed to the loan, and buyer wants a faster, simpler closing. Greater mortgage, during shorter terms, often higher rates, faster underwriting and closing process does not require real property title work. So when it is real property, the home must be legally converted from personal property to real property. Permanent foundation, elimination of vehicle title if one exists, recording with the county as real property, land ownership underneath the home. Without the conversation, many mortgage loan programs are simply just not available. So FHA manufactured home financing, lower down payment, the most conventional options. Credit flexibility, owner occupancy is required. Home must meet FHA standards, and permanent foundation is required in this case. VA, very similar. Eligible veterans and service members qualify. There's no monthly mortgage insurance, no down payment, right? Competitive rates relative to other programs. So keep in mind, a VA funding fee may apply. Owner occupancy again is required, and foundation and property requirements apply. USDA, so this is more of a rural area. There are income limits for that particular area. Property must meet USDA standards, right? So there may be, in some cases, no down payment, and it's competitive rates for most of those rural buyers. So conventional financing, well, Fannie, Freddie Mac, they maintain manufactured housing programs. Down payment requirements vary, could be as little as 5% down. Credit score requirements are set by the specific program, or loan to value options, and no mortgage insurance in some areas. Competitive terms for well-qualified buyers. Jumbo financing. I've seen some jumbo manufactured properties throughout Newport Beach. I've seen some in Petaluma, California. This is manufactured homes on substantial acreage or with a great view, like in those areas I just mentioned. Loan amounts, seen conforming loan limits, and higher on custom manufactured builds. I know Blue Homes is one of those manufacturers. Cost money, great homes, super effective, efficient, and they're incredibly gorgeous and modern to look at. So here's some options, right? Just to give you a quick graph, an illustration for the program. And it does depend on program, credit, property type, and eligibility for VA, USDA, FHA, conventional, Chattel, right? And some other programs. Now, credit score requirements. FHA is the more flexible credit requirements than conventional. VA, there is no official minimum score, but generally we want a credit score of 550 or greater. USDA, definitely need a credit, usually about 640 to 660, and conventional, really need a 660 credit score or greater. Foundation requirements. This single item derails more transactions and deals than anything else. What lenders generally require is permanent foundation, an engineer's certificate, proper tie downs and anchoring, meaning it has to have a proper foundation, compliance with HUD foundation requirements, documentation that the appraiser and underwriter can verify. So if you're looking to buy a property or install, confirm the foundation was permitted and engineered. Don't assume it was just done correctly. Appraisal process. The appraiser reviews comparable sales, HUD data plate, foundation type and condition, overall condition of the home, land value when applicable, right? Common issues, missing or eligible labels, limited comparable sales, foundation that doesn't meet the program requirements. Insurance. This is what you need to confirm for insurance. Homeowners insurance are specific to manufactured housing. Flood insurance applicable to the location, fire coverage, full replacement cost coverage, and any insurance requirements if it's in a park, that's applicable. Buying in a mobile home park. Let's talk about this. What to understand before buying, monthly space rent and how it can increase over time, park approval process for the buyer, HOA or park rules and restrictions, age restrictions if they're applicable, pet policies, and history of rent increases. So keep in mind, you're not just financing a home, you're valuing a long-term relationship with the park. Buying on private land. Keep in mind, the land value is independent of the home. Utility availability and what that connection costs, septic system, well water, access road condition, local zoning restrictions are all important to look at here. Utility considerations, confirm this when you buy. Water source inequality, septic and sewer connection, electrical service capacity, gas if applicable, and if there's any internet or cell service. Utility problems are one of the most common reasons a manufactured home gets delayed at underwriting. Refinancing, common reasons to refinance one of these properties. Rate and term, as long as it improves the overall term or rate of the property. Cash out the excess equity as long as it makes sense. Removing mortgage insurance once eligible for those that have mortgage insurance, or as I mentioned, shortening the term. Renovating a manufactured home can be done in some ways, depending on the loan or property type. Home equity line of credit, home equity loan, renovation specific financing, cash out refinance. So keep in mind, if your lenders offer equity products on manufactured homes in a mobile home park, land ownership status affects available options. Aging condition of the home may limit those choices. Investment properties. Can investors buy manufactured homes? Yeah, you can. DSCR loans, which uses the income of the property to qualify. Non-QM programs for investor scenarios and cash purchase followed by delayed financing. Limitations here would be fewer investor-focused lenders in the space. There really are, right? Land ownership status matters even more for investors. In fact, it's a requirement. Rental income documentation restrictions apply. Now, common reasons that loan may get denied. Here are some. Foundation doesn't meet program requirements. Missing HUD data plate or certification label. Poor overall condition of the home. Other problems. Home was never properly converted to real property. Land lease issues or an unimproved park. Appraisal comes in below the purchase price. Credit income doesn't support the loan program chosen. Now, almost every one of these is preventable with the right guidance before you make an offer, which is why it's so important to apply, look at the scenario, go through the motions of getting pre-approved before you even start to make that offer. Here's some myths. Let's use facts. The myth, they don't appreciate. Well, not true. Manufactured homes on land can appreciate like any other property. They're all trailers. Home built after 1976 meet a federal construction code. That's not right. You can't find them. Well, we just went over FHA, VA, USDA, conventional, VA, right? Or if it's in a park, there are home loans for those as well. They're poor quality. Modern manufacturing includes real quality control and inspection on each one of those properties. Market trends, what we're seeing. Growing demand driven by affordability pressure. New manufacturers entering the market with modern designs, as I mentioned, Blue Home, right? Great builder. Continued improvement in energy efficiency. Rising factory quality control standards. Manufactured housing becomes a larger share of housing starts. So, real client case studies. Young family, first time buyers, super tight budget. They used FHA financing on land, lower down payment, made this ownership possible. We had a VA home buyer, qualified, wanted to buy a private home on private land. Got a super competitive rate in comparison to even a conventional loan on a standard property. And they still love the property. They're still in it now. Retirees that downsized from a larger site-built home, purchased in an age-restricted community down in Dana Point, and simplified their monthly expenses. Manufactured home buying checklist. Here, a couple things. Confirm and review your credit. Confirm your income documentation. Determine land ownership status. Vet, may do the research of the builder or seller. Schedule a thorough inspection, confirm foundation compliance, and get fully underwritten before you're making an offer. That's where we're here to help, right? Common questions. Can you buy in a park? Yes. The financing options are generally more limited than own land. Can you do VA or FHA? Yes, as we mentioned before, as long as they meet those requirements. Can you build one in the 1970s? It depends on the exact date, and it can affect financing. Can you refinance? Often, yes, depending on how the home is titled, where it sits. Can you rent it out? Depending on property type financing or local or park rules within that community. So we go through a mortgage coach analysis like anything else. We unpack those scenarios so you can see what those numbers look like. We're going to go over down payment, what the closing costs may look like, monthly payment, there's park fees or an HOA fee. We want to go over all those in detail. Why buyers choose our team sets us apart. We have deep, specific experience with manufactured home financing, access to programs that a lot of our competition just simply just don't offer. Broker relationships that can expand your options, fast responsive approvals, and clear communication from application to closing. Realtor Corner. So for realtors, here's some questions to ask before buying an offer. Was the home built? Is it on owned or leased land? Is there a permanent foundation? Is a HUD data plate present and legible? Has the title been confirmed to real property? Now, here are some contract issues to be aware of. Financing contingency that don't match manufactured home underwriting. It's important to know actual true timing, right? Who likes to ask for an extension when you're in escrow? Missing foundation documentation. Park approval not as stressed in the contract. If you're buying in a park, you need to have park approval. It's imperative. Seller corner. Get ready early. Confirm and document the foundation. Complete any need repairs before listing. Gather permits and installation documentation. Confirm clean title and proper conversion to real property if applicable. So well documented file moves faster through underwriting like anything for every buyer who makes an offer. So current opportunities. This is a strong fit for manufactured home communities, affordable housing, focused buyers, first-time buyers, retirees looking to downsize, rural housing purchases, and buyers are priced out of the site-built market. Next steps. 1, connect with me. Get your application started. Get fully pre-approved. Review the specific property, compare loan options, and coordinate with your builder or agent. Questions? Let's talk about your situation. I'm here to help. My link's below, and I want to guide you through this. There's my contact information. You can call, text, email, or visit me on social at mike.belfor. Thank you for joining us today. Looking forward to helping you.